We study sentiment as a way to determine if the market is in some type of bubble or people too euphoric or whatever. But if you look at this latest report done by AAII, it says on news of a historic bull market and fresh all-time new highs, individual investors are now bearish on stocks for the fifth consecutive week. So you can see here for the past couple of weeks, there have been more bears than bulls. So pessimism is still pretty high, which can be a positive. But the problem with sentiment, as we well know, is that we can become pessimistic and we can become more pessimistic. Now, I was speaking to a friend the other day who was asking me about whether or not who's president of the United States makes a difference in the stock market. And there's a very low correlation to whether a Democrat or Republican determines the direction of the stock market. The highest correlation is corporate earnings. So if you look at this graph real quick, you'll see here that we have the S&P 500 index versus the S&P 500 earnings. And you can see that the correlation is 98%. It's a very high correlation. So if you're going to pay attention to something, I would pay attention to two things. One would be corporate earnings, and two would be interest rates. And interest rates, by the way, are starting to kind of come down a little bit. Danger, Will Robinson. In other words, an early warning. This is the aggression index. If you notice here, it's breaking down below that 50-day moving average. This has been a very powerful indicator for us in the past. If you remember back at the beginning of the year, we got a major sell-off in this particular indicator, and the market had a very difficult period. We're starting to see similar action here, so just be aware of the fact that the institutions are not buyers. We're more in a distribution selling mode here. The market is showing signs of weakness. Here, let's take a look under the hood. Let's look at 5 indexes just to try to get a handle on what this market is doing. First of all, this is the NASDAQ. We've got a high, a pullback to the 50-day moving average, a lower high, and now we're breaking again below that 50-day moving average. We held here, but we're breaking here. Now, if we look at the mid-cap stocks, it's a completely different story. So it's mainly the large-cap NASDAQ stocks that are having the difficulties here. So the mid-cap index is actually looking quite positive. Here's the New York Stock Exchange, all the stocks on the New York Stock Exchange, holding above that 25-day moving average. Here's the small caps. Now, this is what's really interesting. Small caps, by the way, are very determined by the level of interest rates. And so if interest rates were going up, I really don't think that this index would be making all-time new highs. So the small caps are looking quite constructive. Then we take the S&P 500, which, like the NASDAQ, you've got the top, the lower top, and now you're breaking or basically breaking that 50-day moving average. The primary trend above the 200-day moving average continues to be up. So as far as a long-term indicator, this is saying that everything is fine. We're above the 200-day moving average on both the S&P and the NASDAQ. What's interesting here also is the price of oil. Price of oil is basically plummeting. It actually earlier today got down to $69.63, below $70 a barrel. So it looks like the Iran war is kind of run its course as far as oil prices are concerned. The new lows on the New York Stock Exchange continue to be elevated. This is not a positive. This is a negative. It's saying that the sellers are pretty much in control of this market. So we've seen here 1, 2, 3, 4 days of above 40 a day, which is not a positive. Now, what's going on here is that the large cap Mag 7 stocks, which this fund reflects that group, is breaking down below the 200-day moving average. So the stocks that were leading this market for so long are starting to falter. Now, like I've said in the past, when the generals lead, the troops will follow. So this could be an indication that the overall conditions are starting to deteriorate. Now, you'll also notice here one of the Mag 7 type stocks is NVIDIA, breaking down below the 50-day, not acting positive in any way, below $200 a share. It's not giving the best, most positive sign. Now, it would be interesting to see if it can hold this 200-day moving average. Now, the semiconductor index is holding up somewhat, but is having somewhat of a breakdown here below the 10-day and 21-day moving average, but is holding above the 50 days. So semiconductors continue to be strong, but are starting to show some signs of weakness. Now, last week we talked about IPOs and how Ken Fisher says IPO stands for it's probably overpriced. Well, here's SpaceX. Came out at 135, ran up to 225 plus, and now is right back down to 155, 156. Again, I would emphasize anytime you're looking at an IPO, you should be very patient. You should wait 6 months, 12 months, 18 months, but wait for the setup, because basically what you've got here is a major breakout and a failure. So if you have any questions, please let me know. Thank you very much.